Okay, so there are two ways that we could think about this when we're thinking about a Bollinger Squeeze. Most people would think of this squeeze indicator, and this would be a Bollinger Squeeze is when the Bollinger, you're using the same period Bollinger Bands and the same period Keltner channel. When the Bollinger Bands break inside of the Keltner channel, and then when they break out. Okay, so it would be when we get a breakout, essentially on this bar, that we would go short, or again on this bar, and then again on this bar. Okay, so while the Bollinger Bands are inside of the Keltner channel, that's the squeeze, and that's what this indicator is showing us. Now the other way of doing that, the other way of thinking about a squeeze, a Bollinger Squeeze, would be showing this area right here. Essentially very low volatility. So when the Bollinger gets within a certain range, right? So when it's very tight, we would maybe call this a squeeze right here, and maybe that would be a squeeze, and then this would be a squeeze, and that would be a squeeze. That would be a good one right there too. So that's essentially what we're looking for. Either the Bollinger breaking back inside of the Keltner, or simply the Bollinger going into these periods of consolidation, which would show going from low volatility and then a breakout from that low volatility. So essentially, when you go into a period of low volatility, especially in day trading, what you're looking for is the next breakout, because you go into a period of low volatility, what's the next thing that happens? Usually high volatility. So that's what we're essentially looking for. Let's start with the Bollinger Keltner squeeze. Okay, so we'll call this the actual Anna squeeze, which is the Bollinger Keltner. Squeeze. Okay, so we would actually use a threshold, because what this indicator is doing is it's giving us a value when this plot comes in. So I think it would be set to 1 when it comes in. Let's have a look here. And a squeeze. Yeah, see the signal? Squeeze on. So if it's on, it's a bool. That means it would be true. A bool series is a true false series. So if it's on, it's set to 1. True is 1, false is 0. So we'll set this to 1 here, and know that with the threshold solver, you're defining a set of values here, and those values must be ascending. So if we started with -1, we would have -1 here, and then +1 up at the top, but we don't need -1, we're just using 0 and 1. So we want to get both a long and a short out of this, and you can see right now we're setting the long output to 1, and we're getting the output on every bar on which we get that squeeze, which is signified by the magenta dots, and then we'll set the short output to 1 as well, and then we get both long and short output out of BloodHound. It's very simple, huh? I mean, it's pretty easy. So now, the next thing we want to do is we want to show a breakout. How do we do that? Well, let's use a crossover solver. We'll set indicator A to closing price, and then indicator B to, first of all, well, if the Bollinger is inside the Keltner, then we want to show when it's breaking out of the Keltner. Alright, so we're going to use the Keltner universal here. We don't need to show the midband, we don't need to show the paint bars, and we don't need to show the slope. All we need are the channels. So I turn everything else to false so it doesn't have to go through that. and the offset multiplier has to be changed now to 1.5 because those are the settings within the squeeze indicator. 1.5 for the offset multiplier for the Keltner channel, 2 for the standard deviations for the Bollinger Band. Alright, so upper band, if we break above the upper band, we want to go long. If we break below the lower band, we want to go short. And there we go. So this is closing price. Keltner crossover. Now we're gonna join these together with the AND logic so that they both must be true. So we only want to get a breakout when we have a squeeze. Now the problem here is that we don't get the breakout until the bar after the squeeze right here. So what do we want to do with that? Well, we want to look back a few bars. We want to allow a breakout within a few bars from the squeeze. So we'll use a look back. We'll set the look back. We don't need to displace it. We'll just set a look back 3 bars, which actually needs to be 4 bars, including the bar of, and we set that to max. So the maximum value of the past 4 bars. So if the output is true within the past 4 bars, then it's like an extender basically. Let me just show you this. So it's just pushing the signal forward a few bars. In this case, 3 extra bars. So you can see we had the squeeze on this bar, and then we also have it on the next, the second after, and the third after. So it's essentially just extending the signal forward by 3 bars. So that lookback functions very similarly when it's set to max, basically identically to the signal extender, except that the signal extender has a reset on it. So you could reset, you know, let's say we wanted to extend it forward, but if let's say stochastics was oversold or overbought, then we would want to turn the we would want to turn the extender off. So we would want to push that signal forward for a couple of bars until, say, stochastics or RSI or whatever became overbought or oversold. Then we would stop extending the signal forward, if that makes sense. I'd have to show you that in action for it to really sink in, but now you can see we're getting the signals over here that we wanted, which is actually the bar after the squeeze occurred. And then here we might want to eliminate these. What did I do? I took off the Bollinger Bands? How'd that happen? I don't even remember doing that. Or no, I took off the Keltner channel. How did that happen? Must be losing my mind here. We need to set that to 1.5. There we go. So let's say at this point, you know, we barely have a squeeze there. I wouldn't want to allow that one. No way. This is a good one because the Bollingers are very tight. Now, what we can do is we can define that. So let's say if we wanted to eliminate these 2 longs here, due to the fact that the Bollinger Bands are not tight enough, they're not close together enough. What a great signal that is right there, huh? And this one, and this one. It's kind of a long bar, so I wouldn't want to be entering way up here. That's terrible trade placement, but you got to watch it with some of these signals. You can get the false breakouts, and then they take it back the other direction and force you out of it right as it's about to turn back down. So you got to be careful with this, but this is clearly, you know, what you want to see. We're coming down. We've got a lower high here, a lower low than this previous low, and then another lower high, and then we break out below this low as well. So this is the kind of a breakout that you like to look for. Most breakouts usually fail, but depending on the market structure here, you see we have a series of higher highs and lows, and then breaks out. And then here we have this little contracting period, and then it breaks out. This is the one that's really less reliable right here, in my opinion. So in my testing. So what we want to do now is we want to show when the Bollinger Bands are tight together. So we're going to use a comparison solver. We'll use the Bollinger Band here. You know what? I won't bother with that yet. Okay. Mid-band slope, we don't need that. We don't need the paint bars. We don't need the mid-band. We want the upper band versus the lower band. Okay. Now with this, what we're looking at is we're looking at a range. So anytime we want to show when something is close to something else, when something is within a range of another indicator, so when one indicator is within a range of another indicator, we want to use the neutral amount. The neutral amount corresponds to the small amount here. Alright, so we want to use 1 for the neutral, 0 for the greater than or less than, and then set this to ATR's, average true range, and let's say 6, let's say 6.5 ATRs. That's not good. Huh. Let's say 5. That's way too much. I must be mistaken here. Okay, so now we're tightening it down here. So we've got basically a multiple of 3 times the average true range, and we're showing when the Bollinger Bands, and that's right, that's why I got rid of the Keltner, to show when these Bollinger Bands are tightening here. Okay, so this is the other kind of a squeeze. This is the volatility squeeze of the Bollinger Bands. Not referring to the Keltner channel in any way. Okay, just this area right here. So now, if we wanted to use this to refine, or what would be the word? I guess just to limit it down. Most people would say limit, filter. But whatever word you want to use, just basically make fewer trades, tighten the rules up here. So we're looking at the Bollinger upper Bollinger Band to the lower Bollinger Band comparison. We're looking at actually 3 ATRs. So now I guess we would allow that one still. Let me filter this thing on down. Let's set it to 2.75. Now, it's still not going to be good enough. Let's say 2.5. There we go. Now we're cooking. So now we've filtered it down quite a bit. Yeah. So we would want to have a look back on this one as well. Let's say we'll look back 3 bars on this as well. X. And there we go. So we've got our Bollinger Squeeze breakout trade. me save that differently. Alright, so there we go. Let's just call this let's just call it the entry. And that's it. Some pretty good signals there. Missed this one. Let's see if we can't get that. Not quite. You know what? Let's do this. Let's take this down to about a 10. And then use 2.5. Let's use 2.6. Okay. Now let's see where we stand with everything else. Let's go back to the first one. Okay, we're still good there. We're missing this one now. I wonder why that would be. Yeah, but see, then we get this one. Maybe that's okay. Kind of getting too many signals now. Maybe we should set this to about 20. This is the ATR period. Let's say 15. I don't like the fact that we're getting so many signals now. Okay, well, I cannot connect to Kinetic for some reason, so we can't backtest it right now, but anyway, that's it. If you wanted to allow for more signals, then you would just change this, you know, to whatever ATR setting you want. And the ATR is the average true range indicator, just to be clear on that. That's showing you the volatility. So the ATR is right here. So average true range, it's a measurement of volatility. It was introduced by Wells Wilder, as well as most of all these indicators. Well, quite a lot. Okay. So that's pretty much it. That's your Bollinger Band squeeze breakout signal. Very fast and easy to do in BloodHound. Now, when you get this, you'll download it. So let's say I send it to you in an email. You'll have to first upload the Keltner channel, the Bollinger Band, and the squeeze indicator. So I'll send those three along with this, and then you'll download this into your documents, NinjaTrader 7, templates, BloodHound folder, and you'll put it in here. Alright, I'm just going to delete this old one. And there we go. So this is the folder that it's going to go into. Documents, NinjaTrader 7, templates, BloodHound. And then you can just add BloodHound to the chart and then load the template through here, through the ellipsis, and then File, Open, Bollinger Band Squeeze. Okay, that's it. Good luck. Hope this helps.